So, hello, guests and clients of Cerini Associates. My name is Maggie, and I am joined by Jen, and we are Cerini's single point of contact over here with ADP. So, we help support all existing clients of Cerini Associates, as well as onboarding new clients to our service and really helping out as it pertains to all things payroll, HR, and beyond. So, today, what we would like to go through with you guys is just a brief overview on getting back to business. So a guide to help our clients reopen in this new and ever-changing environment. Some additional details on the Paycheck Protection Program in terms of resources that are available to you, and some additional resources to help you navigate through these changing times. So as businesses transition back into their new normal and states open up, we understand that the return is top of mind as we look at the economic recession, the rebound, virus safety and precautions. And with that, companies are reimagining what their new normal will look like as they work to keep virtual employees engaged and productive while driving operational efficiencies and strong communication channels. With the market shifts, the upcoming election year, and with it, ever-changing policies, procedures, regulation, a lot of companies are focusing on reform strategies surrounding employee productivity and specifically risk mitigation to ensure that they can concentrate on driving profitability and worry less about potential fines and litigation. Lastly, and ultimately, we understand that organizations are working to recalibrate by leveraging data, technology, and insight to develop strategies to compliantly operate and begin producing revenue once more. We imagine that many of you on this call are somewhere along this journey, and we want to be there to help support you in any way that we can, as we would help any of our clients. So as we reimagine the world of work and helping businesses to reopen, a lot of employers that we're talking to are bracing for the realities of what it means that mandates are being lifted, what it means to phase their employees back in. And there's a lot of confusion. And what we wanted to do is help with some key thoughts and some things to consider that may help in ultimately deciding what next step to take. So some food for thought is, what changes have you implemented to ensure a smooth back to work process? So what does that currently look like for you? Are you aware of what guidelines must be met to receive full loan forgiveness if you did receive a loan? How will you adjust business activities and update policies for social distancing, sanitation, and employee safety? Are your employees comfortable coming back to work? Do they feel that you care about them? And what will that do to employee engagement should you fall short in one of those areas? And then ultimately, how have you or plan to balance a phased approach to reopening the business while remaining focused on your current roles and responsibilities? Because obviously this is just an add-on. So, federal and state agencies and governments have started to release framework and guidance for businesses to follow before reopening. And in New York State specifically, there are required safety plans that have been released by industry and by county. So we're helping our clients implement those through a safety plan template. And we'd be happy to help any clients with Cerini navigate through this as well, as there are specific parameters in how to reopen safely and effectively. So, now that clients in the Northeast are in phases 2, 3, and we're even seeing some parts of upstate New York and the surrounding areas potentially navigate into phase 4, we understand that it's critical for you to have some direction on what steps you'll need to take in order to safely reintroduce employees back into the workplace. So what we've done is we've taken our clients' feedback, we've spoken to a ton of business owners, and we've drawn up a brief checklist as a starting point or as a jumping off point, to help you as you plan for welcoming your team back to work with some additional key factors to consider. So you can see several of them here, and there's a lot that we can go through. So you'll notice that there's a variety of health, safety, and legal considerations, and many of these action items will vary by industry and by location, but a few of the top items on the checklist that we want to ensure that you're aware of and comfortable with as they've become definite hot spots for many of the business owners we work with is number one, the return to work letter. So as you bring staff back in, if you've had to furlough or do any layoffs or even cut hours, you could be at risk of not satisfying the requirements for the PPP loan forgiveness, which requires that you maintain staffing levels. Now, if you are unable to bring all of your employees back, you may not be able to maintain staffing levels. So with many people being on unemployment, and as we've heard, some people just don't want to come back to work because they're earning more on unemployment than they were previously in their role. It's essential that you leverage this return to work letter to notify your employees, A, that their job is open and being offered back to them, and then ultimately as documentation should they reject the offer to return, which would insulate and protect you from any negative impact of you not maintaining staffing levels. The second piece I wanted to touch on is the updated job descriptions and policies within your employee handbook to capture all required measures for new health and safety protocols so that employees understand what is expected of them, along with insulating the business from potential closures and penalties should these requirements not be adhered to. So we think about social distancing guidelines, staggered scheduling, the use of proper PPE. It is crucial now more than ever that your employees understand exactly what is expected of them, that it is extremely clear, and that they're able to follow the rules to minimize your risk as a business owner or as a member of the community or as a member serving others, because ultimately it could negatively impact, number one, risk and liability, but number two, your reputation if not executed correctly on how to appropriately manage these pieces of your business. So getting back to business in today's market, we completely understand can be very overwhelming. So we hope that checklists like these can help take the guesswork out of it so that you can refocus your energy on revitalizing the business to its full potential without unnecessary stress or uncertainty. And we are happy to help. So I'm going to turn it over to Jen for a little bit more.
Thank you, Maggie, and good morning, everyone. From everything that we just heard about so far, I think it's safe to say that there truly is a lot to think about when it comes to reopening your doors. And then just when you feel like you have everything figured out and you have it all covered, new changes are happening and you kind of find yourself reevaluating your plan, how the changes are impacting your business, and how to implement next steps. We talk to business owners every day, and they're all looking for guidance when it comes to changes in legislation, bringing back staff, or possibly finding new people, how to communicate new policies and procedures when it comes to HR and safety in the workplace, and also just strategizing on how to retain employees, your existing employees. When you think about unemployment being at an all-time high, utilizing some retention tools could really be the key to making employees feel committed and safe in your organization. Slide 10, please. So when you're going through how to cover all your bases, it's important to consider the support that you would get from HR outsourcing. Shown here are some ways that HR outsourcing can help you navigate through these times and successfully return to work with some peace of mind. So for example, some of the ways that ADP is helping our clients is by providing a human resource business partner, as well as a risk and safety consultant. My Life Advisors is another example of how we're helping our clients, which is kind of like an outlet for employees to go to and get some of their questions answered. Many times having conversations with your staff directly, especially when it comes to their health, is a liability. So the way that the program works well for all parties is sort of twofold. The business owner can get feedback from My Life Advisors that maybe there have been a lot of questions around certain topics. And then from there, the business owner can select from a list of trainings that they can hold for their employees. And this can be a great way to communicate and clarify policies and procedures in your organization. And at the same time, employees may not feel comfortable speaking up, so it just kind of gives them an outlet to help resolve issues sort of before they arise. In addition to that, HR outsourcing can be a great way to seamlessly onboard employees and to check all the boxes when it comes to health benefits, 401k offerings, and just giving employees more control over their personal information. And having this kind of support for your staff is an efficient way to access resources and handle anything that kind of comes your way through termination or retirement for your employees. Slide 11, please. So HR is certainly important when it comes to, the uncertainty and the questions today. But if something does happen, it's really important to kind of have that safety net to catch you, which can really make all the difference. So when you think about EPLI insurance, as well as legal support and guidance, those are critical tools to navigating through all these new laws and updates that are constantly changing. Slide 12, please. So we make a lot of resources available to business owners right on our website for guidance in regards to loan forgiveness. The FAQs are one of my favorites because they make it really simple to kind of click through and get quick and to the point responses to your questions. So it's kind of nice to click through and feel as though you're able to follow along and you have a good understanding of the content that you're reading. Slide 13. Some other resources that we make available are the loan forgiveness checklist shown here. We also provide some great examples of different scenarios for different businesses, as well as the loan forgiveness estimator tool that's shown here. You can enter in your loan amount, your payroll costs, your employee wages, and get a really good understanding of what the forgiveness portion looks like for your business. We've received a lot of feedback from many different CPAs that this is pretty accurate and also has been very helpful. Slide 14. So with all of the uncertainty and instability in the insurance environment, many business owners are left wondering how this pandemic will impact their health insurance rates and renewals. So I mentioned earlier, but state unemployment insurance is rising substantially for businesses, and this is your one controllable tax. Things are changing quickly for businesses, and there has become a true need for a risk and safety program amongst all of the HR and compliance concerns going on. So when you think about all of the circumstances that have impacted companies today, many business owners are looking towards the PEO option, which is a professional employer organization. If you're not familiar, just to kind of summarize it, a PEO will insulate a company from a variety of liabilities while engaging and retaining their top talent employees. It offers stability and shifts liability by being part of a large group when it comes to health benefits, workers' comp, retirement plans, HR, and beyond. To tell a business owner that they'll be able to more accurately plan for what the future will look like, they can kind of take a breath and just kind of feel more informed about making their decisions to define their new normal. Since this option is a growing trend, a lot of common questions is really coming around about whether joining a PEO during the PPP loan forgiveness period will adversely impact the business's ability to apply or receive loan forgiveness. So we just wanted to make sure we touched on that. Slide 15, please. Our reports are also very helpful for clients who need to show their payroll costs and their different paid dates for the covered periods that they elected. It breaks it out by employee if there was a reduction in wages, and also full-time equivalent employee values, all of which are what businesses need to provide in order to receive their loan forgiveness. So I know we just went over a lot of information. I hope that this was helpful to you. I certainly encourage you to check out our website for more details. And if anyone has any questions around what they need to do, we're obviously more than happy to speak with you and share information. So I thank you all for your time today.
Yeah, so as Jen said, we hope you found this information very helpful. At the end of the day, in a presentation like this, we do our best to cast a wide net and make the information surface level enough that it can be applicable to many, but we don't necessarily get into the specifics. So, what we would ask you guys to do is 4 quick questions so that we can understand a little bit deeper about what specifically your non-for-profit business is and what your role is in that business. So number 1, are you a business owner? If no, what's your role in the non-for-profit world? What has been your biggest struggle during the COVID-19 crisis? Any feedback on something Jen and I could have done better in today's presentation? And what would you like to have more information on? And just by sending us a quick email so that we understand your situation a little bit better, we have a 20-page guide of getting back to work. It's all about Beyond the Curve. It goes through navigating regulations to stay compliant. It touches on policies, privacy acts, record keeping, the unemployment claims and how to manage them. It talks about redefining the future of work as it pertains to data security, IT, and HR, in addition to employee retention tax credits. And lastly, it talks about engaging people in this new normal. So, how can we engage employees who are working from home? What can we do with communication strategies, and ultimately, how can you continue to drive productivity out of your people if you're not able to look, feel, and have that conversation with them daily? So we look forward to hearing from you. We're going to save questions for the end. So right now, we're going to hand it over to Ed.
Thank you, Maggie. Oh, sorry about that. Okay, good morning, everyone. My name is Ed Probst, and I'm one of the founding partners at the Vanguard Insurance Agency. We're a 21-year-old benefits consulting firm, and we've been working with the folks over at Cerini for several years now, and helping them with their clients and their benefit needs. I want to thank and congratulate, first and foremost, the Cerini staff for another incredible event that sponsors the nonprofit sector, and thank you for asking us to present today. You've no doubt, well, first off, housekeeping, at the end, as Maggie said, we will, you can put any of your questions in the chat box, and the three of us will take questions at the end of this presentation. And if there's anything that we don't get to today, we'll be sure to follow up with you after the fact and get you the answers to anything that you might have to. You've no doubt looked at the CARES Act from many different angles by now. And many of you have learned a lot about the PPP program and the tax implications. And Cerini Associates has no doubt been a leader in this, providing resources and education to the nonprofit sector when it comes to this. Today, we're going to take a look at the government response from an employee benefits lens and how that's also applied to the nonprofit sector. One thing, it's important to note that we need to look at this from a few different perspectives as we evaluate employee benefits and how they were impacted. One, we need to look at how the government and the flexibility the government has created in employee benefit policies, what the insurance market and carriers have responded to in order to create more flexibility, but also how this impacts your own policies. And I think Maggie and Jennifer already did a good job of alluding to that, but it's important that we merge those three to make sure that we're abiding by the law and being compliant. So with that said, the government response to COVID-19 was both the CARES Act and the FFCRA, the Federal First Coronavirus Relief Act. Where we came from was a sudden impact, basically. Back in March, as we all know, there was a lot of uncertainty, a lot of confusion. People were sick, areas were quarantined, and stay-at-home orders started to be put into effect. So the government had to make a quick response to that, and because of that, there were a lot of uncertainties in the beginning of both of these acts, and people took time as they evolved. The CARES Act, in particular, was one that evolved over several weeks and months and is still evolving today, as you're seeing that there's a lot more flexibilities in the PPP program and a lot of things that have been updated along the way. Both had an impact on employee benefit plans, and both have evolved in that arena as well. You're going to find that the insurance companies followed suit as both the federal government and the state governments, along with the insurance carriers, started to create more flexibility in employee benefit plans to help employers with furloughed employees, employees that needed to be laid off. So we're going to talk about that a little bit. So first, the Federal First Coronavirus Relief Response Act was signed into law on March 18, 2020. This was the law that provided 2 weeks of paid sick leave due to COVID-19, up to 80 hours, and provided up to $511 a day, 100% of salary, up to $511 a day, if you were sick, if you were in quarantine, or you were advised by a medical professional to be quarantined. The one thing that I will make note of is that there was some confusion, and a lot of our clients had asked us about the ability to correspond with the New York response, which is the emergency paid sick leave. And one thing that many have not understood is that the emergency sick leave that was implemented under New York law was only for those that were in quarantine areas. And I think that that was the New York response from March 18th till April 1st, which is when the federal Coronavirus Response Act went into effect. And so many people thought that they would be able to file claims against their PFL and DBL policies for those 2 weeks if they were out sick, but really it was only if you were affected by you were in a quarantine area. After April 1st, you could put up to 2 weeks of paid sick leave due to COVID-19. You could also file for 2/3 up to $200 a day if you were caring for a sick family member or you had a child whose school was closed and you had to stay home. And of course, that was an additional 10 weeks of expanded Family and Medical Leave Act at that 2/3 rate up to $200 a day if you were caring for a child at home. Assistance was available for employers via refundable tax credits. So how employers were reimbursed for providing this sick leave was the ability to file for tax credits against their employment taxes in order to recoup those funds. Tax credits, this did include health insurance. So employers were able to add the amount of the health insurance they provided for their employees into those tax credits while they were out on leave. And I think one other note that is important is that, and some of these are questions that we had from our clients, was that if an employee was in their waiting period for health insurance and they were out sick or were on a qualified leave, they still could become eligible for benefits within that time period. So during this time period, just like under FMLA laws, employers were required to provide health insurance. So if you had a new employee and they went out sick during that waiting period, and remained out sick, they still were able to qualify for health insurance during that period. So what were the questions that we received? Well, first and foremost, employers were trying to understand how they could work within furloughs and layoffs for their employees, and what laws would require an employer to continue active coverage during that time period. So we're going to talk a little bit later about the Affordable Care Act, but of course the Affordable Care Act does require that if you are an applicable large employer, that you do pay for you do offer affordable coverage to your employees. So we'll talk about that a little bit more in depth, but the Affordable Care Act was definitely a law that could have created the mandate for you to provide health insurance while your employees were on leave or on furlough. When can employees change their benefit elections? So there's a lot of flexibility that was added by insurance companies and by the government, the IRS, with cafeteria rules. Employees and insurance companies did allow for mid-year election changes to the benefits for limited time periods. But it's important to note that during that period, employers should have been checking their actively at work clauses to make sure that they didn't become non-compliant with their own handbooks and summary plan descriptions. Employers were asking us who covers the cost of this. So that was a big question that we received when I furlough my employee with the good intentions of, one, that I want to get this employee to come back to work once we're through this crisis. How do I work out that arrangement, and who covers that cost? So the answer to that question is, if you are not an applicable large employer, you really don't have, you have to offer the coverage at a level. If you don't have to pay for that coverage, I should say, but many employers decided to pay for that coverage. So while their employees were out on furlough, they continued to offer them coverage and pay for that coverage at the same level they did before they left. We'll talk a little bit more about that in a moment, about how they can go about doing that. And what if an employer wants to offer coverage when it's not required to? So non-applicable large employers that that want to offer coverage during that period could have done so in a couple of different ways. They could have continued them on their group health insurance coverage, which many decided to do, or they could have offered them COBRA coverage once they took them off the benefit plan. So talk a little bit more about who covers the costs. So employers, during a period of furlough where they were keeping their employees on health insurance, are allowed to bill the employees for that coverage while they're out, just like they do under normal COBRA conditions. It's important to note that those contributions could have been collected as often as every payroll cycle. So if your payroll cycle is weekly, you could have billed your employees on a weekly basis for the coverage while they were out on furlough. Contributions that are collected outside of payroll are taxable, though. They're not pre-tax. So that brings up the question of, as you're billing these employees, they're going to pay for this after tax, and does that create a situation where they may want to defer that to later when you bring them back? And that is something that some employers decided to do. They can make arrangements with employers, but they have to be consistent with those arrangements. So HIPAA non-discrimination laws will apply to this, and you have to make sure that when you're changing contributions, making arrangements with employees, that it's consistent for all employees. So if an employee, if you decide to make an arrangement with an employee that you will bill for the time period they were out on furlough when they come back, which many employers decided to do and spread that out over several months, that we do that and we allow that for all the employees that apply to that same class. That would allow you to keep that pre-tax status that was lost if you were billing outside the payroll deduction plans. You definitely want to, many employers had asked us about changing their own contributions. So if you were in a situation where your business was shut down or was dramatically impacted, which many businesses were, you may have wanted to consider changing your own contributions. Now, for non-applicable large employers that are not required to pay for health insurance, the only thing you need to consider there is, again, you want to make sure that if you're changing your elections, that you're notifying your employees properly, you're updating your summary plan descriptions, and you're making notice of material modifications and notifying your employees of this change so that you do not violate any ERISA laws or create any non-discrimination issues. Because certain contributions, and again, as you're changing them, you should consult with your benefit consultants and attorneys to make sure that your strategies are not violating any non-discrimination rules. And again, the ACA requires applicable large employers to offer affordable coverage that it does not cost the employees more than 9.78% of their income. So if you are an applicable large employer and you're making these arrangements, make sure that you're not creating a situation where your plan could be deemed unaffordable and therefore create penalties. So talk about the CARES Act, signed into law on 3/27/20. Some of the key benefit positions that were benefit provisions that were related are unemployment compensation was given a $600 increase to the state jurisdiction for unemployment. There was an expanded use of OTC and menstrual care products for FSA, HSA, and HRA. So for over-the-counter medications in 2013, after the Affordable Care Act was put into place, they restricted over-the-counter medications, and you were no longer allowed to do that. So the FSA laws were updated due to the CARES Act, and now you can submit for FSA, HSA, and HRA for over-the-counter meds and menstrual care products for the first time. COVID-19 testing without cost sharing. So all the CARES Act implemented a regulation that all coronavirus-related testing by any insurance carrier be deemed preventive care, and therefore be no cost share. So no one should pay a copay or a deductible for any coronavirus-related testing. The insurance companies weighed in here, and many of the insurance companies went ahead and extended that to COVID-19 treatment. So there were several insurance companies, and you should check with your own, that said that we will not have any cost share, deductibles, co-insurance, co-payments for any treatment that was a result of COVID-19. So if you were in the hospital and your plan had a hospital deductible and co-insurance, that would not be applied if it was due to COVID-19. They also, the CARES Act required coverage for COVID-19 vaccines when they become available and preventive treatments when they become available at no cost share. To talk about telehealth a little, so telehealth was on the rise for several years prior to this. Most of the carriers were starting to implement telehealth to some degree, some more than others. The CARES Act made it mandatory that telehealth be, if there was a copay associated with it or a cost associated, that it be reimbursable by high deductible HSA plans. Carriers, I will tell you, they responded by stepping up their game when it came to telehealth. So many of the carriers that did not have telehealth in place prior to the CARES Act added it, and those that were that had it on a limited basis provided it to all their clients. So you will see now that telehealth has become a first line of defense for many of the carriers, and again, is included under the CARES Act for high deductible plans. And of course, coronavirus-related 401k distributions were allowed under the CARES Act through 2020 up to $100,000 without any cost share, without any penalty. So this, as you can see, and we've talked about a bit, is that there are implications to the Affordable Care Act under the affordability threshold, and of course, layoffs. Layoffs are a different story. If the employee was laid off or terminated officially, then that would absolve any ACA implications. COBRA rules do apply in that instance, so you want to make sure that you do offer COBRA. Talking about COBRA, many employers, as we said, furloughed their employees, and they went and they offered COBRA, so they needed to offer COBRA to any non-ALEs, and ALEs, due to a reduction in hour on their monthly measurement period, would have to offer COBRA too, and of course, layoffs are the same. One thing that has changed recently is COBRA laws have been updated, and now it's been updated to the beginning and the end of the outbreak period. So what does that mean? The beginning of the outbreak period is officially March 1st, 2020. The end of the outbreak period is whenever the government decides that this is not a national emergency. So any of the COBRA regulations, for instance, the 60-day rule where employees are allowed to go back and make retroactive elections for COBRA up to 60 days after their termination, that 60 days in that instance would apply at the end of the outbreak period. So if the end of the outbreak period becomes September 1st, and the employee was terminated in June, they will have 60 days from September 1st to elect COBRA back to that June retroactive termination date. So it's important to note that all of the COBRA guidelines and mandated requirements are now updated to after the end of the outbreak period. Talk briefly about FSA and cafeteria plan changes. As we already mentioned, there was a repeal of the restriction on OTC medications. We already talked about feminine care products are eligible for the first time. The IRS did allow now for election changes to be permissible with or without qualifying events. However, what we're seeing, and it's important for employers to understand, is because the IRS is allowing it, does not mean that all employers will follow it. So it's really an employer decision on whether they will allow their employees to make mid-year election changes for flex spending account. And many of the concerns that have come up are related to, what do I do if an employee has already spent some of their election and they try to make an election change back to zero? That is a big challenge, and one that the IRS has not been clear on with how to handle. So I would recommend that employers are looking at that, and if you are going to allow your employees to make mid-year election changes to either their dependent care accounts or their flex spending accounts, that you go back and make sure that that's consistent in your handbook, for one, but also make sure that you do not allow them to do it any further than what they have, or the minimum that they've already spent in their plan. And also, permissible rollovers were up to $550 a year from $500. And also, there was always employers had to, with FSA, had to make a decision on whether they if they want to have a grace period at the end of the year or they want to have a $500 rollover. They've increased it to $550, and now the employer can actually take advantage of both if they'd like. So you are eligible now to be able to both have a grace period for your employees at the end of the year to spend down FSA Cafeteria plan monies, and you can also offer a $550 rollover provision for them to allow them to bring funds into the next year. So with that, I think we'll turn it back over to Jennifer and Maggie as well. And I don't see any questions so far in the chat. Are you guys seeing anything?
No. So, we have about, 5 or so minutes. If there are any specific questions, we would love to field any of them for you. So if you want to post in the Q&A or in the chat, any questions about reopening checklists, about the guide to getting back to work, or about health and anything like that, just let us know.